Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining me in this live webinar on the 8th of April. We're going to take a look at the Forex market, the charts in just a second. But before we do that, please be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more about conditions and other details, and if it is suitable, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and other financial markets is considered high risk and may not be suitable for everyone. To find out more information on that, please contact an independent financial advisor. This webinar is not advice and is for informational and educational purposes only, and by continuing watching this webinar, you agree with this disclaimer. Before we start the webinar, please be aware that throughout April, there's a special deposit bonus available for those that have joined our webinars before. You know that, but just in case you're joining for the first time, be aware that this deposit bonus is valid for April. So take a look at the conditions and details via this link. I'm sure you'll find it interesting, so it's at least worth your minute or two attention to take a look if it is something for you or not. Okay, so that is available through that link right here. All right, so today we're going to take a look at moving averages and using moving averages to understand the currency pairs and prices a bit better, and to use them as a tool to find better entries and better exits. So moving averages, of course, have advantages and disadvantages. Just briefly, if you're new in here by any chance, it might be good to let me know, because some of you have been coming back more regularly, so then tend to maybe perhaps skip some basic explanations that most of you already know. So it's good if you are relatively new here, let me know. But moving averages obviously have a bit of disadvantage that they don't necessarily say anything about the candle right now, what's going to happen now, but they do give, of course, a good idea about the flow of the past, and that sometimes has some value in determining the speed, the momentum, in determining the trend, and or if there is a trend, first of all, and support or resistance. So they're good stuff, but moving averages is certainly not the only thing I'm using, but I think they're a very useful, very capable part of any trading plan. All right, so with that introduction to moving averages, let's take a look at the calendar. Today we have some smaller euro news, but later today we have the FOMC meeting minutes. That's going to be interesting. It's 11 hours, still far away from now, but obviously this will be interesting from a fundamental point of view to see if there's any change and what the change would be compared to last time. Personally, looking at technicals, I would expect a bit weaker kind of dollar to emerge from this event, but let's see. It really could push it both ways, in fact, depending on how the statement is interpreted. Last month was already a pretty substantial kind of event, pretty hefty impact, so maybe this one will be a bit more quieter. Let's see. It's difficult to speculate. I'm not looking at fundamentals too much for trading purposes. So, but if I had to make a forecast, then I would say probably not that. It's not going to be a rocker, but let's see. Otherwise, we know that in April there's not going to be a rate increase for sure. That they already excluded the last time. So the only thing we can find out is if we have a rate increase. Can we figure out if they have a rate increase in June or September or perhaps 2016, like I always was thinking and predicting that it will not happen this year, but that could be wrong. Let's see. Most of the people think somewhere in the second half of this year. Let's see. Anyhow, moving on to charts. All right. Good morning, Justice. Good morning, Jen. Good to see you here, both of you. So yesterday we were talking about that euro dollar, and it did make that intraday fall. We, at this moment, are using, as you can see, we're looking at the alligator. You can find the alligator by going to Insert, Indicators, Bill Williams, Alligator. Alligator, you automatically plot 3 different moving averages. Let me show you. They're just the standard values, 13, 8, and 5. They're quite short-term, so they show more momentum than trend. I think they kind of show the flow, which is very useful in Forex trading because the flow can kind of quickly change, quicker maybe than other financial products like stocks. There's a lot of ups and downs throughout the day and throughout the week. So, in that regard, flow is good, momentum is good. So Alligator does a pretty good job with that. And it actually is kind of plotted in the future a bit, as you can see. And it shows very nicely when the alligator is flat that there's a consolidation, and when, of course, the jaws of this alligator open, basically, that's the idea, then we see momentum increasing. That's kind of the whole concept behind the alligator. For those that have joined my webinars, with markets in the past, you know that I also use 21 EMA bands that are high, low, and close. Let me show you an example here. Wait, let me show one without, or let's do it this way. Hang on. Here. This is another way of looking at it, of course, with 3 moving averages indicating a band of support and resistance, and that is done by using the close, but also the high and the low of the moving average. So then you get this band. And this is more stable. As you can see, the difference with the alligator is very responsive. It is kind of quicker in its momentum. And the band is kind of more steady as it goes, right? It responds, but later and not as quick. It's kind of more of a big tanker ship that doesn't change its course too quickly. It does flow with the price, but it's kind of slower.
Thank you for the warning. Is that better now? Sorry about that. I see people leaving now, which is annoying. Okay, apologies. I had the wrong microphone settings. So thank you, Modris and others and Justinas and Vitaslav for pointing that out. Sorry about that. So I was talking about Great. So to restart this webinar, partially, the 21 band is going to have a different effect than the alligator. We can put them on. In fact, let me take this one off to avoid a bit clustering. It's difficult to see, in fact, now. They are pretty close to each other, in fact. Right? They move quite at similar pace. They just respond a bit differently when you get a trend reversal. That's, I think, the main difference. But it's difficult to see because the alligator is kind of hidden behind it. But anyhow, we'll use both of them. And let's start with the euro dollar and take a look at live charts now. All right, let's go back to the alligator here. Yesterday, we talked about the fact that there could be an intraday pressure to the downside, which happened basically based on this small little bear flag and the momentum prior to it. So we had bearish momentum, bear flag, and there was a chance that we could make one more fall like that and have an intraday downside on the Tuesday trading day. That happened. We made indeed a fall and stopped at the minus 618 target, which was the area I was looking to buy yesterday, and it did bounce, but still pushed a bit further before we got another bounce. So will we get an upside today? That is the big question. Yesterday we had the potential for the downside, and we did have it. Now at this moment, do we have a potential buy still? I do think yes. We had a 3-wave correction here. All in all, the 4-hour chart is certainly not very appealing because it's in a correction. But the good thing about it is that it's close to the support trend line. It's also close to, if we use a fib like this, for instance, these support levels. So it is near support, but it has nothing really to do with moving averages. The moving averages are all twisted and turned and intertwined, and the moving averages are not really showing a very good trending trade at this moment. So from a moving average point of view, probably the best advice at the moment would be to stay out. If anyone did take a long yesterday, or was thinking about it, then it does make sense from a chart perspective, chart pattern perspective, or support perspective, or fib perspective. There could be a good reason to bounce. How much price action movement will we see throughout the day could be limited because of the FOMC. The market does tend to kind of quiet down. So this rally could be limited until perhaps the FOMC is able to push it one way or another. When we look at yesterday's downside momentum, we broke this trend line, so we're kind of out of that at the moment. And if you look at by candle rules, I know this could be a bit complicated for those that have just joined, but basically here we already had a significant amount of candles not breaking this low, so that indicates the potential for this to be a significant bottom. So 108 is round level, so I expect this to be a bounce. So with the stop loss below 107.20 or even below 108, that will be a setup, in my opinion, as indicated yesterday as well. That hasn't changed. The only thing is, if we look at it from a moving average perspective, there's no reason to buy, not as yet. Maybe the 50-minute chart could see a potential bullish aligned moving averages here. You can see the alligator already slightly twisted to the upside, and perhaps a break of this would indicate the continuation of that, right? So, if that is a confirmation, that could be an entry here at 108.60, for instance, with a stop loss below 108. The advantage of that, to a certain degree, would be that at least this particular resistance is broken, and this particular potential bear flag is not in play. Because at this moment, if this is a bear flag, it should break to the downside and not to the upside. So by using trend lines, you can kind of limit the weakness sometimes of moving averages. All right, so we got one question. Any other questions perhaps on the euro dollar? How many candles do you use? How many candles and do you use? I use it on all time frames, so sometimes it just really depends what time frame I'm interested in the pair. Right? Because on the 4-hour chart, you can see that we don't have 5 to 6 candles, we just have 2. So it's still on the early side. So that can be sometimes giving conflict of conflict of analysis sometimes, because of the fact that on one time frame we do have 5 to 6 candles, but the other one we don't. So we have to weigh other factors as well. Is there support? Is there resistance nearby? What is the trend? What time frame do I want to trade it on? Stuff like that. Candle patterns, indeed. Let's take a look at the daily chart. From this perspective too, it's a pretty tight range. We have clear 3 points of resistance. We have a support here and here. Weekly chart, you can see that we are retracing last week's bullish candle. And from a 4-hour point of view, the candles, this particular high is probably still important because 108.50. The reason is that the last bearish candle is this one. And if you look at the bullish candles after that, they were quite small. They're still within that one bearish candle, right? So to at least have a break of some kind of important resistance we would need to break that high, which is basically the same as breaking, no it isn't. Okay, why now? It's the same as breaking this 30-minute top or the 50-minute tops here. So 108.50 at the moment, I would say important level for bulls. Let's see, the bears, do we have a reason to short? Let's take a look. 108.50, above 108.50 would be bullish territory. At this moment, I would still consider this bullish territory, but is there a reason to go short and perhaps we'll get another intraday momentum? The 1 hour moving averages are still bearish. Let's take a look at Camarilla. Let me add a pivot point indicator. And personally, I would not do that. Support is too close by. We have 107.25, 107.50, 108. We have a monthly pivot point here. So personally, I would not go short. It could move down, but what can you do? You can't catch and grab everything. It's just impossible. So you have to focus on things that make sense to you. And the downside just runs into too many layers of support. Psychological levels like 105, 108, 107.50, excuse me, 108. Even 107.75, we have this whole base of support here. We have a monthly pivot. So that it just wouldn't be, I think, in the long run, profitable. The 108.50, by the way, is also a daily pivot point. That could be a good level to break, indeed. And the weekly is up at 109. That's plenty of space still. That's 50 pips up to that weekly pivot. And perhaps we can rally higher all the way up to the next resistance, which is here all the way up at 110. Not 110, 110, sorry. That's it from the euro point of view, I think. So let's take a look at pound dollar. The pound dollar is not going to have better moving averages. So after this, we're going to take a look at a whole multitude of moving averages and see which one is better lined up. And the pound is really accelerating. Actually, look at this alligator. If we use, for instance, other moving averages, you can see the impulse increasing. Unfortunately, this happened before we started, but let me see if I can. Here you can see the moving average. The 21 is being pulled away from the 80, 89 here. You can see that clearly, indicating that momentum. Let me just quickly change this to a 8. Make this a 34. Also numbers are like 8 is a pretty fast one, as you can see. No, okay. I thought maybe there would be a crossover here indicating it, but indicating that pickup of speed. But you do see it accelerate from the 34. A lot of momentum in any case. So let's go back to this 4-hour chart. We had the same analysis yesterday saying, okay, price could go back to support when it makes the fall, and it did fall. We saw yesterday the same analysis, a momentum, bear flag, the potential for an intraday downside, which happened, and the potential to bounce. We were thinking about 148.30, wasn't it, or 148? I think it was 148.30 or 148. The minus 618 target. As you can see, it actually bounced off both minus 272 and minus 618 targets. Let me circle that 1 second. Hang on. Wait, my drawing tool is not working. 1 second. Right here and right here. So price bounced off that 148 and is now moving up. So that is a long, if you took that long yesterday, as we were discussing yesterday, this trade is doing better than the euro dollar because it's already moving more aggressively to the upside. The pound is actually showing a bit more strength than the euro. So the euro pound is probably moving down. We're seeing a rally at this moment. So it's a bit on the late side now if you didn't join yesterday, to join now. Let's talk about potential for today if you haven't joined already. The 4-hour chart, I mean, from a moving average point of view, it's a total range. and there's no trend at the moment. So this too is not really a moving average trade. It's more a chart pattern trade. It's a potential ascending wedge with a flat top, obviously, and a angled bottom, and price bouncing off that bottom. So the only thing that, in my opinion, would still be merited is to wait for some kind of pullback. Probably put a fib wherever this stops, for instance, and wait for a return. At this moment, it's picking up pretty big speed. For instance, if you use the Camarilla pivot points, wait for a move back to about halfway H3, H4, for instance, 148.50. Move back to the weekly pivot point, perhaps. That could be used as support again. At this moment, it's just pushing quite fast. And typically, if you join now, it's a bit vulnerable to retrace. It could keep pushing up a few pips, but where do you put the stop loss? The reward to risk is quite out of whack at the moment. So it's not a spot that I typically would like to take it. So the conclusion, either you're in it based on yesterday's analysis, or now it's a bit too late, and the only option would be to wait for a pullback. So we can keep an eye on it. Anything else? Pullback, yeah, to depends where this stops, but yeah, 148.60 indeed, 148.50. Alrighty, let's take a look at all the currency pairs too. And the goal now would be to see which particular currencies could be relatively strong and which could be on the weaker side, to see which pair has the most potential. So we're going to go a bit faster now and look at multiple currencies and see if there's any particular one we can zoom into. Pound yen is breaking out of this consolidation. Yesterday's wick does not really encourage me though, so the break doesn't look that fantastic at the moment. Euro yen, not too big of a fan of it. It's a small kind of falling wedge, and there doesn't seem to be, on the daily the trend is down, but the 4-hour I would say is just a consolidation. For the moment does not seem interesting. Kind of a mixed picture, right? Downtrend on the daily, but 1 and 4 hour are just consolidating. Let's check others. Pound odd slowly reverting back down. It actually has a clear bottom and top. It had a great upside, now showing struggle with the upside and perhaps moving back down. From a price action point of view and a fib point of view, we've reached major resistance. So a push through 193.20 could be an interesting setup with a swing trade setup with a stop loss below this top. That's a pretty wide setup because it's on the daily chart. So not everyone is going to like that, but it is a potential for a break below 193.20. Let's zoom in and see if there's something else available. 4-hour chart would have the same actually. On the lower time frames, it doesn't really seem too appealing at this point because we don't have an established trend to the downside. So from that point of view, let's move on. Euro odd. No, it had a great upside, but kind of struggling here. Very bearish daily candle. So from that regard, from that point of view, more downside is likely. But it's not a setup that is easy to take at this moment. Again, the odd kind of news announcement on the rate yesterday, creating a strong Aussie, and it's dominating, still dominating the Aussie kind of structure, which makes it difficult because you have a big impulse, and if you want to protect the stop loss behind a 4-hour world, or there's nothing really of a structure to hide any particular stop loss here. Pound New Zealand moving averages are flat. Euro New Zealand could be interesting. Trying to push through. Trying to push through the L3 too. All right, that could be very interesting. Let's take a look at the pound CAD. This is in the downtrend too. That could be interesting. Euro CAD too. So perhaps these three will provide some setups to look at. Dollar yen did not respect the resistance line here, pushed through it, but then eventually did respect this top and is pushing lower again. Remains choppy. The odd USD, yesterday also talked about the odd USD, that could be a good buy upon the retracement. So that seems to be happening. We had a retracement actually even deeper than I thought. I thought maybe the 50 or 38.2 fib, but it actually stopped at the 61.8 and is rallying. So here too, some of you maybe took the long based on yesterday. If you didn't, then at this point, I would wait for a bit of pullback, because at this moment I personally don't see the sense of taking it. If someone does take it, the stop loss would have to be relatively tight, probably just below this pin bar, this low here, and then trail stop each candle high. It is a way of trading the momentum on the hourly chart, for instance. Right, so that would be the way to do it, if you still want to catch part of this momentum. Let's see, dollar CAD. Let me narrow the list a bit. So it seems to be those pairs. Does anyone hear me at the moment? Okay, cool. So let's focus on those pairs. I don't think that at this moment that others make sense at this moment. Tiad is reversing against the CAD and Swiss franc, so that's not really not that well lined up. And you don't want to take too many reversal trades either. I'm looking already at the odd USD, so you don't want to overtrade Aussie reversal either, because then you're exposed to the problem that if Aussie doesn't continue, then you're pretty heavily focused on the Aussie, then you're right away encountering several trades that are not going well. So that's not good. You want to keep kind of a portfolio balance as well. All right, so let's take a look at the Euro CAD, Euro New Zealand, and Pound CAD. Your dollar is pushing, as we said, that the 180, 185 level is important. So It's actually is breaking now indeed. It's kind of following the pound, but a bit later. So both Euro, Pound, and Aussie, as I said yesterday, we're getting the bounce. Let's see how far it can go. The Aussie and Pound have bounced further. The Euro is now starting. Or perhaps starting. We don't know for sure, but it looks like it though. So it seems to be panning out. We had yesterday intraday downside, and today we could have intraday upside. That's the moment looking so. If you look at the 21 band that we have here on the 50-minute chart, you can see that the moving averages were bearish and now they're bullish. So that could already indicate, it's not everything, but it could indicate the twist of the intraday perspective. This upside, in my opinion, is still a bit more with the, although there's not a major trend as we said on the euro dollar, there is no trend actually, it's still more in line with the pattern which is showing this, right? So in that regard it is aligned with the bigger time frame momentum. So in that regard we see this what's going on. Vasil's asking, well, it's basically to bounce off this monthly pivot point, the trend line, the fibs, everything we've discussed. I think it's just a technical move at the moment. So let's take a look at the three pairs that seem the most interesting. Euro New Zealand, Euro CAD, besides the Euro dollar, pound dollar, and Aussie. So let's take a look at the Euro New Zealand first of all. Euro New Zealand is breaking, and is breaking a pretty long, sturdy trend line. Let me get rid of everything here. All right, kind of had a rising wedge. No matter how you draw these trend lines, right, we're breaking support. So let's move and add the moving averages. You can see that when we had this correction, the moving averages were quite intertwined, intermixed here, and they were just choppiness all over, basically, right? Daily chart, the moving averages are still heavily bearish. So in that regard, we have a downtrend on the daily looking moving averages. We have a consolidation on the 4-hour. And in the meantime, we actually have momentum to the downside when looking at the hourly. That's all we can read from 3 time frames and just looking at the alligator. So in that regard, a break below this fractal here indicates the potential for the 1 hour and the daily to continue with that downside, and the 4-hour to turn back into a downtrend, right? An entry from that perspective could be right here, in fact. The only problem on the 4-hour perspective is that the stop loss at this moment has to be all the way up here, which is 200 pips, which is a lot for many of us. So that is not a trade that most of us will like. So we can shop around and try to see if there's a better entry or a tighter stop loss to reduce the risk and get a better balance. In my opinion, though, if a wider stop loss is used above this top, it is a short right now. If that is too big of a stop loss, then we need to find perhaps a different solution if it's available. All right. One of the things we can wait for is a pullback to, for instance, 144, which is the broken trend line, and the moving averages. Kind of retrace part of this downside, and let's see. Let me take a look at Camarillo levels, the pivot points. And use a stop loss probably just above this top. Obviously it has this risk because it's putting a stop loss in the middle of the playing field on the 4-hour chart, but it would be the only way to reduce the risk to about 60 pips. If this fractal is used, the risk could even be further reduced to about 25 pips. And an exit would have to be at L4 for about a target of 80 pips, which does give a great reward to risk. The chances of this trade will work out, I don't know, maybe 50-50, but the reward to risk certainly in its favor. You can see the moving averages are aligned. The 21 band is down. The 89 is above the band. So we got alignment. We have price, 21, and then the 144. 21 is at a downside angle. So if it retraces back up to the band, it could be a resistance. That's the whole idea. Now, of course, it could be a break of L3 right now. Some of you might be when seeing, and that is true. It is a short at this moment. From a Camarilla point of view, a stop loss at H3 would be sufficient, but it is a whacking 120, and the target would be L5, which is probably about a bit less than 100, around 100. Yeah. So just barely less than 1-to-1. That's because, of course, we already pushed through the L3 a bit here. That's using Camarilla. Using moving averages, as I said, pull back to this 21 band. The 21 band, of course, will be moving down as each candle progresses. The band will move with price, obviously. So perhaps if this makes a move down to L4, we could see a bounce. Let me show you. We could see a bounce there and move back to L3, and in the meantime, the moving averages have progressed lower and give a confluence at the same spot. Moving averages in L3 are at the same level. And that would be an interesting short as well in the future. So either, from a moving average point of view, either a short somewhere in the band now, or if it does move lower, then probably a short, but then a bit lower at the L3. All right, EuroCAD, let's take a look. Let's see. Do I use an 8 EMA and 34 EMA cross? Well, or are they simple waves? Waves, probably you mean. I only use it really if there's a particular zone that has a very strong kind of confluence and I expect a turnaround. When I have a zone like that, I'm interested in a potential crossover sometimes because of the fact that it indicates that the momentum is going back. So, for instance, on the euro dollar, or the pound dollar, for instance, one second. Let me narrow this down. Hang on. Strange. Anyhow, the point is that if we use, for instance, 5 here, or what we were using 8 and 34. Okay, let's stick to that. I use different numbers. Doesn't really matter. The point is that. Alrighty. 8 and 34 is going to be on the slower side here. We only had the crossover at this candle, right? So that was the long actually that happened in this morning. If we make that a bit quicker, like a 21, and this perhaps a 5, it actually happened here. Right? Now the point is not to use this as a system because, in my opinion, crossovers are not viable trading systems if you don't use it at the right spots. If you only use that, it's going to chop you up. But if you use it at spots that you see a particular pattern or support or resistance or trend, and you want to trade with that, then waiting for instance, in this case, we have a potential for a uptrend to continue from here, right? We know that. So in that regard, then this would make sense because it kind of gives the confirmation of the bounce to the upside. So this was a very kind of slow crossover, so one could still wait for a break above the H3 as a breakout trade, for instance, right? That would be one way of tackling an entry. If you don't want to take an entry here when price is falling, but rather wait for price to fall, stop, and go back, then this is one way of doing that. If you don't mind trading against momentum, because some of us don't like trading to the upside if price is falling so much to the downside, right? Makes sense because sometimes it is dangerous. And this is one way of going around that. All right, EuroCAD. Let's see. EuroCAD is down, down, down. I like the downside potential of the EuroCAD and PoundCAD. The only thing I don't like about it is the dollar CAD and the fact that the dollar CAD is still above this support. That makes me leery about downside. And there is the potential that despite this break on the PoundCAD that's happening right now, it might not get followed through. We're actually pulling back. And the break didn't go too far, so it's certainly an iffy break at the moment. We can keep an eye on this fib. We can keep an eye on the 185.75, the 50 fib, the trend line top in here. See if price does stop there, but all in all, it's a bit difficult because of the dollar CAD that still hasn't chosen. Is it a downtrend continuation, or is it indeed going to bounce at support, which is this green line? So that's a bit of a difficult, tricky part of those particular pairs. New Zealand dollar, let's see, Bjorn is talking about New Zealand dollar. Let's see, double bottom, then fail downswing can that be seen as a wave 2, and wave 3 just started. Daily chart. It certainly could be seen as a third potential wave, indeed. Whether if it's a wave 3 or a wave C, we don't know yet, but not too important, I think, at the moment. It does seem that upside is more likely. That's why I like the Aussie as well, to the upside. And the Kiwi is not different. The reason why I like the Aussie a bit more is because the Aussie New Zealand is going to the upside. There is bullish momentum. So the Aussie seems to be beating the Kiwi, which gives the Aussie a bit more perspective maybe than the Kiwi, but same story here I think as the odd USD indeed. Potential to bounce. Actually, on the 4-hour chart we this fib also went to the 50 fib, right? So yeah, agree that is possible upside. Whether it's a wave 3, I'm not sure. Let's take a look. At this moment, I would say it's more a corrective impulse, probably. But it really doesn't matter. As long as it moves up, we'll see how far this can ride. If it really goes far, it could be a wave 3. At the moment, looking at this particular price action, it's moving up, but relatively choppy, so looks more corrective. But all in all, I agree that it could be a third wave. If it's a wave 3 or wave C, we have to see. So I think, from my perspective, it's Aussie, Euro, Pound upside against the dollar at the moment, and it's Euro, New Zealand downside. How about the Euro odd? Let me take a look. The Euro odd was downside too, but we just had an awkward position of the pair because of the Aussie. Yeah, the Euro odd is, in my opinion, a bit difficult spot at the moment. So those 4 pairs look the best setup, I would say. Now, not that I'm going to take all 4 of them, but the dollar weakness and Aussie strength, New Zealand strength, those look the best setup. Let's take a look quickly at gold, what's it doing here. Let's see. We trace back to the 50 fib, bouncing up again. Silver didn't go that deep. All right. Are there any particular questions? Let's see. Judy's asking, let's see. Do you see the euro pound to the upside? Let's take a look at that. And Modris is saying that the NFP is not paying off. Dollar is still strong. Dollar is strong in general. It's been strong for a year, of course. That trend is not going to end, I think, necessarily now. But I do think that looking at the potential, looking at this structure of this current euro dollar, for instance, you can see the trend obviously very strong for the last year and falling 3,500. And at one point or another, I do expect some kind of consolidation, a pause within this massive downside. I don't think this downtrend is over, but at one point or another, a kind of a consolidation for wave 4 is most likely going to happen. This could be it, because we do see for the first time a relatively strong engulfing twins plus 2 bullish candles after that. So perhaps this is the moment. I think that after that, though, the downtrend will continue. Obviously, the consolidation that we've seen here like this so far has been relatively choppy. So it's certainly not the best of conditions for a trending trade, either way at the moment, unless it really kind of proves itself either above 110 or below 107. But considering the support is close by, considering the potential for a bigger retracement, I think the upside makes sense here. But obviously, the FOMC is going to provide some guidance to that. When the Fed starts to increase its rate in September, we'll probably see signals of that in June or something like that. So what could happen is that maybe April and May we see euro dollar bouncing around 107 up to 112 maybe, staying in that zone. And then June, when perhaps more signals are clear, and eventually when the rate does happen, the rate hike, then we probably see this euro dollar make that last continuation. We're not necessarily very last, but probably for this year, the last downside. Yeah, I know what you mean. The swing should break now or never. Yeah, although these consolidations can be a pain and can last sometimes a bit longer than we hope for. They kind of catch us by surprise because the thing is that we had so much movement that we don't even think about consolidation anymore. It's just trend after momentum, and it's just difficult to imagine it can stop. But perhaps this is the moment it will. Let's see. There's a bit of divergence here. So, all right, let's move to the euro pound, and I'll take a look at. Wait, we got two other questions. Do you think dollar Swiss is going to go up and continue it up? Its uptrend. We'll take a look at that as well. And $30-minute chart, euro dollar. It makes sense. Let's see. Yeah, it could be one. The thing is that this shoulder is very, very small, but it was used. What the neckline would be is kind of that's a bit difficult because normally this should be, let's see, a resistance point where we can put this trend line, but we don't have it at the moment. We could do it like that. In that case, it broke already. Maybe on the 50-minute chart it will be better visible. Like this. That's the one we were already using, in fact. So yeah, basically what Vasil is looking at is this, here, and then this. Looks a bit weird, this pattern. I mean, the picture I drew, but basically, can't draw. 1 second. There, that's better. All right. Yeah, looks like it. I agree. So, dollar Swissy and euro pound. Let's take a look. Flat moving averages in the meantime, but if we do break this trend line, we can see that the trend prior to that was certainly down. So if we do break support, we could have a pretty good continuation of that. 4-hour is looking more like a consolidation at the moment, a triangle. So we're at a spot where I would say we're bouncing or breaking. And at the moment, a break would probably be confirmed if we push below this 72.80. Yeah. Fortunately, that's requires a potential stop loss above this top or above at least yesterday's high, which at the moment is pretty significant. The other tactic would be to wait for the break of 72.80 but then try to lower, like zoom into lower time frames and see if a smaller bear flag is available, like for instance this, just to give you an example. Wait for the break of that and put the stop loss above the bear flag. Of course, that reduces the risk. So let me say it this way, below 72.80 is a bearish environment. I wouldn't use a pending order because then a pretty big stop loss is needed. But unless you find that okay. Or just see it as a bearish zone where if it does break below 72.80, it's possible to look for corrections like this and use those for further shorts. That's probably the best tactic. Dollar Swissy. It's a difficult one. I hardly look at the Swiss francs because still of that event from January. I'm not a big fan of the Swiss franc. I traded it once or twice after that. I was in this piece somewhere when it was moving up. At this moment, moving averages are not going to help us at all at this point. I'm not too big of a fan of it either at this moment. It seems to be breaking. It could have had kind of this falling wedge. So from that, in that respect, it's trying to break. But we had a similar dollar-yen break, in fact, and no, I'm not a big fan of it at this point. Even despite this break, we know that the dollar is weakening against the euro, so no, I would probably need to see something like at least a break of this trend line, and then perhaps the upside seems a bit more interesting. Not that I would take it right away, but we're getting into more of a bullish zone at that particular moment if we break above 96.70. But honestly, I am not looking much at the Swiss francs. I think that the whole structure of the market is just doesn't speak to me. It doesn't give me very useful information. At this moment, it just seems to be quite corrective. When it was trending up like this on the 4-hour chart, this was pretty neat. In fact, that was not bad. I was still not a big fan of the Swiss franc because of the intervention, but at least it had a 4-hour trend. At this moment, it doesn't. So it's not my favorite pair. If it does break above this resistance, it does change things. I would reconsider and take a look again. So unfortunately, that that is maybe not much of help to you, but I don't really I can't really add anything to that. For downside, probably have to look at, I don't know, break below the support level, I would say 94.95. Dollar CAD. This one is even more difficult because we had such a big uptrend and we're right at support. That's why I don't like the CAD in general, because it is certainly at a heavy bouncing spot. It's just definitely showing bearish momentum and a bearish trend at this point at 4-hour chart. So I'm not going to short it right into that support, but I'm not looking to long it as yet if you see the flow at the moment, which is down. So I'm neutral. Unless it breaks, let's see, we actually had already a break of that trend line. That's not valid. Probably need to break above this 4-hour fractal at the very minimum. Break above this resistance. that's really the whole story. There is, for me, nothing really to add. If it does break below 123.50, then we're getting into some type of bearish zone. How far it will move down, difficult to say, but there could be some intra-week pressure to the downside and some CAD strength. If if it does bounce here, then we have potential to move back up to resistance. So that particular trade at this moment looks more interesting, the upside. But looking at this momentum, it does not confirm that. And I need that confirmation. I wouldn't take it long just like that here. Especially because yesterday we already had a pause. Monday and yesterday. The other, once again, the other validation line or confirmation line would be this 4-hour top, because if it breaks through that, then we'll probably have completed or finished this momentum down, and we're probably heading back up. So the most important lines, 125.25 and 123.50. You can see the mess that is on this chart when looking at the moving averages. That's strange. Well, I don't know what the camera is doing here in the middle, but ignore that. Let me try to get rid of it somehow. Okay, that's better. So, as you can see on the daily chart, it's very rangy at this moment. And trying to break below actually the band again. So from that perspective, if you look at it from that way, we had a failure to move up and we're breaking below the 21 the second time. That could indicate actually a higher chance that we're going to move down to 123 or 121.50, the targets here. Still, that would not lure me to trading it now, though. That would not tempt me to trade it now. But the double dip below the 20 to 21 band is a potential sign. But not enough. Here we had a double dip. Didn't go down, right? Moved up still, so it's not everything. Here we didn't have double dips. Price still closed above the 21. Here we had a double dip. Did move down a bit. Here too, a bigger double dip, moved down a bit. So double dips sometimes are important levels because here, for instance, one move up, one moves up, and then you start a continuation. That can happen because you got to kind of finish the correction like this. So either a double dip like that is a correction for more downside like that, or we see it kind of make a bigger correction like, where do we have that example? Here, for instance, right? Or here, yeah. So we're at an interesting bouncer break spot. Aussie, we did look at it. We can take a look one more time. And if you have any last questions, let me know. Otherwise, we'll wrap it up. I don't have much to add after this. From my perspective, we talked about it all. Let's see. Audio is getting that bounce we talked about yesterday at the 38.250 fib. It actually went a bit lower. It went to the 61.8. And there is potential for some reversal here or a zigzag correction. And indeed, the upside potential, Madras agrees, or had the same analysis beforehand. So, yeah, I do think that this has the potential for a zigzag and upside on the USD potential. When we look at the 4-hour chart or daily chart, you can see that we're making kind of an expanding wedge. If you like chart panels like that, I do think we have one at the moment. And in that regard, we were bouncing off. Actually, I was already talking Monday about the potential for USD to go up because of this this wedge, and that seems to be indeed panning out. So the target could be all the way up here at 79.25, 79.50. And we are getting a bit of a pause. This is already the fourth bullish day that didn't break this bottom. So there is that potential. Now we do have to realize that this trend line could still be important. We would like for price to break out of that and above it if we really want to see upside continue. Anyone who took the long here with the stop loss below this bottom to catch kind of like part of this momentum should move now to trail stop just to below 76.72. Well, actually the low, let me take a look at the low here. The low of this candle is 76.74. So somewhere around 76.70, 76.71. Reducing the risk to about half. That's good, and still pushing up. That's one way of catching momentum. If you didn't take this turnaround here, or if you didn't take this fractal break here, for instance, then you have to use the candles themselves, the candle lows or highs, to take a trade and put the stop loss. Otherwise, the reward to risk is not there. Now, of course, if this 30-minute chart again posts a candle that doesn't take out the stop loss, then this low could be used and the stop loss can be moved up and up and up. The target for the moment should be I would say, if anyone took this 30-minute trade, it should be the H4 for about 26 pips. About a one-to-one trade, I would say, with a trail stop. The other option would be to aim for actually the H5. That could be a bit ambitious, though, considering the tight trail stop. Probably would be on a difficult side to get that. Probably one-to-one is the best option here. Of course, it is possible to aim for that H5, but then I probably wouldn't use a trail for each candle, but would keep the stop loss probably below this potential fractal here, or maybe keep it at break even. Hope that price kind of makes an upside here, makes a small bull flag before continuing up, and then you can still ride the rest of that tide. That will be one way of trying to stay and stick in for the H5 target if one-to-one doesn't seem that appealing to you. Really depends how you want to approach it. Or you can even do a mix. Take a bit of profit at 25 pips, close some of it, and then leave part of it open for the bigger target. Personally, I think using a trail here is good. Reducing the risk by half is a substantial benefit. Pound odd is about to break 193. If it breaks below, it could be an entry, but it would have to use a whopping stop loss above the current top, which is all the way here. So that could be a bit big of a trade. But otherwise, it's still above this level. I do think personally that considering yesterday's bearish engulfing twins, that a break is likely, and we'll probably see price head lower and moving down to the next support level, which would be around 190 and 188. If it breaks that, then we can see that the next target will be 185. And price respected is 78.6 fibs. So breakouts here and here, or perhaps even here, do seem likely, to me at least at this moment. But the first things first. First, it needs to break this, and second, this will be the target. Because you never know. It could always break, then bounce at the support level, and start making a triangle. Which it kind of is already doing right now, in fact. So it's the top of the triangle. Or it's actually halfway the triangle now. All right, so that was, I think, the last questions. I think I answered them all, but if I missed yours, let me know. If you're wondering about the webinars tonight, we got Nana taking a look at market conditions, the best time to trade, and the best time to stay out. We got also nervousness when you're in a trade. I think that could be very useful if you're in a trade and feel uncomfortable at times about a setup or about sticking to your trade or about following it up to target, not knowing what to do at times. So that could be good for you, how to avoid nervousness when you're trading, during trades. That's tomorrow evening. And otherwise, those are the last two of this week. Then we'll be back with the same schedule next week. All right, so, well, thanks for joining. Much appreciated, your comments and ideas and questions. Always appreciate the interaction. So thanks for that, and thanks for joining. We'll take a last look, euro, dollar, trying to push through. It's not very exciting, not very excited about pushing, but it is a bit. Pound is still on track, I would say, but at this moment, need a pullback to probably this H4, to be honest, because now it's too far. All right. We'll be back. We'll be back actually tomorrow evening myself, but hope to see you in Nana's webinars too. And wish you all happy hunting, good trading, and a good day. Cheers.